Good morning, everyone. Let's take a closer look at what has been moving the currency, commodity, and metals market, along with some key technical levels to watch this week. So, starting with the US dollar index. The index eased to the 98 level on Tuesday, extending a steady pullback from its late July 2 month high. A softer headline inflation, a weaker payroll data, and a downbeat ISM report has strengthened expectations for September rate cut from the Fed. And the probability of a 25 basis point cut is now well above 80%, keeping the dollar under pressure against the most G10 peers. And President Trump's move to extend the US China tariff truce by 90 days has also removed some safe haven demand. And technically, the index is still trading within an ascending channel, but price action is now leaning on the channel's lower boundary near 98. A confirmed break below here could open the way to 97.7 and possibly 96.38, while any recovery faced layered resistance at 98.7, 99, and a 100-day SMA near 99.46. Moving to WTI crude oil. The oil settled around 62.5 per barrel, hovering just above its 2 month low of 62.2. The 90-day US China tariff truce has eased immediate supply fears, while traders await the outcome of US Russia discussions on Ukraine. Trump has downplayed the likelihood of a breakthrough, and Ukrainian President Zelensky remains firm against territorial concessions. Longer term, OPEC still projects a tighter oil market in 2026, but short term sentiment is weighed by technical weakness. Prices have broken below a symmetrical triangle and remain in a broader descending channel. Immediate support sits at 62.2, followed by 61.6 and $60, while a recovery above 64.4 could set up a retest of 65.7 and the 50% Fibonacci retracement. Next, onto spot gold. Gold is holding near 33.50 per ounce after US CPI data supported the case for a September rate cut. The core inflation rose to a 6 month high, but headline inflation came in slightly softer than expected, easing concerns of more aggressive Fed action. Traders also reacted to President Trump's comment that gold would not be subject to tariffs, though no formal policy details have emerged. On the technical front, gold remains within the overall bullish ascending triangle pattern, supported by its 50-day SMA. Key resistance stays at 3400, with further targets at 3450 and the record 3500 level. On the downside, a drop below 3300 could see a test of the 100-day SMA near 3296, and RSI is sitting around the neutral 50 mark, and MACD momentum is modestly positive. And last but not least, the Australian dollar. The Aussie dollar is trading around 0.6520 after the RBA cut its cash rate by 25 basis points to 3.6%, which matched the market expectations. The Aussie has been supported by the extension of the US-China trade truce, which benefits Australia's export outlook because China is its largest trading partner. And technically, Australian dollar is consolidating just above the lower edge of its ascending channel and remains above the 9-day EMA at 0.6491. Resistance is seen as 0.6570 and 0.66, while a break below 0.6490 would weaken the short-term momentum and open the way to 0.6449 and 0.64. So to wrap up, the US dollar is under pressure as rate cut bets grow, and oil remains soft and technically vulnerable. Gold is steady but capped by resistance, and the Australian dollar is holding its ground post at the RBA. The coming days will bring fresh data and central bank signals that could set the tone for the next major move across the market.